There are usually different segments, like division, product lines, or region. Management wants to know which segments are doing well and which need improvement. MFRS 8 helps by showing financial information for each segment based on how management evaluates them internally. A segment must be reported if it meets certain threshold, which is usually 10% of the revenue, profit, or assets. Smaller segments must be also included if they are important together. For each segment, we disclose revenue, profit or loss, and assets, along with the measurement method and how it ties back to the company's total financial statement. We also include information about major products, services, customers, or regions if it is significant. Overall, MFRS 8 make it easier to see how different parts of a company contribute to the whole business and also helps management and external users make informed decisions. Context of MFRS 8. The CODM refers to the Chief Operating Decision Maker, which is the key person or group that management uses to assess how different parts of the business are doing and to decide where resources should go. This is usually someone at the top, like the CEO or executive team. They make these decisions regularly by using internal reports, not the ones that are published to the external users. And these reports will help them to evaluate each segment's performance and then allocate funds or resources accordingly. The CODM role is crucial because it determines how the company views its business units, which ones are important, which ones need investment, and which ones may need to be restructured. Next, for the example of CODM role in public listed company in Malaysia, the first one is the company that we chose, which is Darby. The CODM is Datuk Jeffrey Salim Davidson, the group CEO, and the second one is the Petronas, which is Tan Sri Tengku Muhammad Taufik, which is the president and group CEO. Their decision shape how this large Malaysian group manage their diverse operation under MFRS 8.
So, reportable segments. What is it? It's basically two or more operating segments which are aggregated into a single operating segment if the aggregation is consistent with the core principles of the MFRS. The segments have similar economic characteristics and the segments are similar in each of the following respects. First, the nature of the products and services. Second, the nature of the production processes. Third, the type or class of customer for your products and services. Fourth, the method used to distribute the product and services. And the fifth one, if applicable, the nature of the regulatory environments. For example, the banking, insurance, or public utilities. When talking about reportable segments, there are two types. The first one is business segment. Business segment is a distinguishable component of an entity that is engaged in providing an individual product or service or a group of related product or services, and that is subject to risk and return that are different from those of other businesses segments. The second one is the geographical segments. It is a distinguishable component of an entity that is providing an individual product or services within a particular economic environment, and that is subject to risk and returns that are different from those of other economic environments. So basically, the business segment is a group of products or services that are somewhat similar. Meanwhile, the geographical segment is within a particular economic environment, such as a country, for example. Right. So now we're talking about the quantitative threshold test, or also known as the 10% threshold test. So there are three types of threshold tests that need to be done. First is the reported revenue. Each company's reported revenue, including both sales to external customers and inter-segment sales or transfers, is 10% or more of the combined revenue, internal and external, of all operating segments. The second one is profit or loss. The absolute amount of a company's reported profit or loss is 10% or more of the greater in absolute amount of, first, the combined reported profit of all operating segments that did not report a loss, and the second one, the combined reported loss of all operating segments that reported a loss. Now, the third one is assets. The segment's assets are 10% or more of the combined assets of all operating segments. So, as we've discussed before, we do know that business segment is about a group of related products and services. In the term of Sime Darby, our company that we've chosen, they have three reportable segments, which is property development, investment and asset management, and also leisure. For the year 2024, the property development incurred a profit of 696,015 ringgit. Meanwhile, for investment and asset management, they incurred a loss of 19,840 ringgit. Same goes to Malaysia, also incurred a loss of 30,075 ringgit, which in return would be amount to 517,602 ringgit for the year end of 2024, including the subsection of elimination. On the other hand, for geographical segment, as we've discussed before, is about providing products or services within a particular economic environment, for example, in a foreign country. As for Sime Darby, they have incurred revenue within 3 different countries. First is Malaysia, second is the United Kingdom, and third is Singapore. For non-current assets and other financial instruments, they incurred in 4 different countries. First, Malaysia, second is the United Kingdom, third is Singapore, and the fourth one is Australia.
For the next question is the key benefits of segmental reporting for financial statement users. First, the benefits is enhancing the ability to evaluate performances and allocation of capital. By identifying the sectors or activities that generate revenue and operational profit, users can make better investment, capital allocation, and valuation decisions. As we can see in this financial statement, the revenue is highest at the property development, showing that the company is focused more on the property development. And at the operating profit, we can see that the leisure suffer loss, while investment of asset management has gained a little profit only. But at the profit for the year, only property development has a profit while the others suffer loss. The next benefit is improved understanding of risk exposure and liquidity for assessment. Lenders and investors can make informed decisions after considering concentration of risk and segment-specific exposures. As we can see in this financial statement, the total liabilities for property development is the highest, but its total asset is also the highest. This shows that the lenders and investors can concentrate in refinancing, covenant, and bankruptcy risk in that area.
Now, I'll be explaining about Part B interim financial reporting. So, what is actually FAR570? Basically, FAR570 is actually a standard that explains how companies should prepare their interim financial reports. Interim means the reporting period is shorter than 1 full year. So, instead of waiting for the annual financial statements, companies will provide updates quarterly, bi-monthly, or even semi-annually. These reports can either be a complete set of financial statement or just a condensed version, depending on what the company chooses. Now, moving on to the objectives. The first one is to prescribe the minimum content of an interim report. Basically, the standard tells company what must be included, so the report is useful and consistent across all companies. The second one is about recognition and measurement principles. This means how the companies should record, measure, and recognize items in their interim financial statements, whether they use complete statements or condensed statements. Next, we have 2 examples of significant events that can affect the company's financial position and performance. For the first event is, in Q1 2025, Sime Darby recorded a 458 million gain from selling its Malaysia Vision Valley land. Let's talk about how this affects the company. First of all, the company gets a big cash inflow, which helps strengthen short-term liquidity. However, their assets also decreases because the land they sold is removed from their property and development assets. On the positive side, the gain from this also increases the retained earnings, so the net asset per share will go up a bit higher. And finally, the earning per share will improve, but just take note that this is a one-off gain, which is not something that happens every quarter. Now, for the second event, which is on 6 January 2025, Sime Darby Property and its joint venture signed a share sale agreement to purchase the remaining 50% equity interest. How this will affect the company? Once the acquisition is complete, STMAI and STMAV become fully owned subsidiaries. That means Sime Darby Property can consolidate 100% of their asset into its financial statements. The group paid 120 million for this, so depending on how they finance it, this reduces the cash or increases their borrowings. Full ownership also means better recurring income potential because the company gets full control of rental income or development profits. They can streamline operation, cut SJV-related costs, and hopefully improve profit margins. And lastly, there will be some impact on the earning per share depending on how the acquisition influences the profit.
Sime Darby Property Berhad is using quarterly for their interim reporting periods. Now let's look at their financial statements for both current period and comparative period. For their statement of financial position, the current period is as at 30 September 2025 and their comparative period is as at 31st December 2023. For their statement of profit or loss, the current period is 1 July 2025 until 30 September 2025. and the comparative period is 1 July 2024 until 30 September 2024. For their statement of comprehensive income is 1 July 2025 until 30 September 2025. And the comparative period is 1 July 2024 until 30 September 2024. For their statement of changes in equity, the current period is 1 January 2025 until 30 September 2025. For their comparative period, it is 1 January 2024 until 30 September 2024. And their statement of cash flow, the current period is 1 January 2025 until 30 September 2025. And their comparative period is 1 January 2024 until 30 September 2024.
So I think that's all from us. Thank you for watching.